Everyone. I'm Daniel Clear, Global Head of Sustainable Finance at HSBC, and thank you everyone for joining us. I know you just had a good discussion with Chris Faint about the transition of the UK economy to net zero, and we want to continue on this discussion topic, and in particular explore the role of the treasurer, the role of the finance function in this transition. 2020 clearly was a very important year, I think, both on the broader ESG agenda and then in particular on climate change and the social element of it. And if I look back at 2020, I think three really important things happened. One, investors really took this topic into the mainstream. I think many of us have realized that ESG, and in particular climate, is now a main driver of company performance. Numerous studies have shown that in 2020, companies with a better ESG performance and companies with a better climate alignment have outperformed the market significantly. And that is driving reallocation of capital. The second thing that happened is that a lot of the large companies in the world have used the crisis to change their business model and change strategy and are leaning into a net zero economy, have made commitments. And many of you will realize that means all of their supply chains have to change. And so it trickles down from the largest companies in the world now across the economy. And the third element, which I think is really important to realize, is that policymakers and regulators are moving on this topic. Governments are using stimulus to push for green as a way of creating jobs. And regulators are taking this topic on. And you will just heard from Chris Faint from the Bank of England what they're doing on this topic, which will affect the way financial institutions are operating in this field. There is an however, despite essentially locking down the global economy in 2020, global emissions only dropped by 8%, which only shows us how much more needs to happen to achieve some of the ambitious targets. And so 2021 really is a key year for change. And I would again point out three things that will happen in 2021, according to, I think, my opinion. First of all, I would call it the return of climate diplomacy. You will have seen yesterday with the inauguration of Joe Biden, the US is coming back to the table on climate change. The European Union is very active in this field. China made a big commitment towards the end of last year. And the UK has an important role to play to bring all of these actors together at COP26 at the end of this year. The second thing is that the discussion is now moving into the real economy, into the transition sectors, into the core of the discussion, the sectors from transportation, energy, the food system, the metals and mining industry, the commodity sectors that we talk about today. And I think we will see a lot more of that discussion in the heart of the economy. And the third topic that I would watch for 2021 is the importance of nature. People are realizing without negative emissions, without investments in nature, it'd be very hard to achieve net zero. So at HSBC, we made a net zero commitment last October. We also earmarked $1 trillion of financing for the transition. And I'm incredibly pleased today to have, I think, a fantastic panel with me to discuss some of these next frontiers. What is happening this year and what can we as a financial service industry and you as a community of treasurers do in this field? So let me briefly introduce the panelists and then get some insights from this group. We have, first of all, Leila Sassi. She's a senior financing and capital markets manager at Lafarge Holcim. At Lafarge, she's in charge of the funding strategy and the credit rating approach, and she's been leading a lot of the ESG activities. Lafarge has just issued a sustainability-linked bond and the first company in the building materials industry that have done so. Second, we have Will Rook. He's the leader of the sustainability program at Sanico. Sanico is a 160-year-old company in the commodities, especially the sugar business. We will hear a lot about the role that they're playing from trade finance to supply chain management, logistics, and risk management across the supply chain. And obviously, sustainability is taking a very important role now in the food system. We have Farnam Bitgoli, who is a colleague of mine from HSBC. Farnam has two important jobs at HSBC. She's leading our Global Sustainable Bonds Initiative, and she's also the head of the EMEA ESG Solutions team. The ESG Solutions team is a new team that we've created last year to bring a more comprehensive set of solutions and answers to our clients. And finally, Jonathan Curry. Jonathan is the Global Chief Investment Officer for liquidity products at HSBC Asset Management. He will explain later to you why he's here, because it's not the obvious topic, but I think many of you will realize that it's not just a financing topic. It's also a question how you deal with your liquidity. And Jonathan will give us more insights into this. I would like to start with Leila and really hear from you what made Lafarge sort of move onto that journey of ESG, and what role did the issuance of a sustainability-linked bond play for you?
Good morning, everyone, and thank you very much, Daniel, for your question, and thank you for the invitation for this discussion panel on ESG. Just so to reply your question, Daniel, it was a very long journey for us and coupled with a lot of work, and it's only the beginning. Climate change is one of our biggest challenges. As you know, the cement industry has a high carbon footprint, and which accounts around 7% of our global CO2 emissions. So it's our duty to find a way to build in a more sustainable way, knowing that concrete, which is made from cement, is the second most consumed substance in the world, following water. So sustainability, including climate change, of course, is a key pillar of our strategy. And we try to put ESG at the heart of everything we do. So it started before, but 2019 was for us the year which marked the change. In 2019, our CEO nominated Magali Anderson at ExCo level as a Group Chief Sustainability Officer. And one of her first missions was to revamp our environmental strategy, and especially on CO2. And she did it very well. And on last September, we announced our new CO2 strategy, endorsed by our board, and we are the first global building material company to have signed the net zero pledge with a 2030 target validated by the Science Based Targets Initiative, the SBTi. So in simple words, Lafarge Holcim has the ambition to become a carbon neutral company, and we gave for this intermediate target by 2030, for which we committed to reduce our Scope 1 and Scope 2 CO2 emissions with levels aligned with a well below 2 degree scenario as per Paris Agreement, and in compliance and even more ambitious than the EU taxonomy for our industry. So first of all, it was very important to have a very ambitious and credible strategy, sustainability strategy, with level aligned with all the standards. And of course, this was a result of lots of work within the company, where we engaged with a lot of experts and to make the pledge possible. Basically, when the sustainability strategy came out, so we had very strong target, as I said, to be able to go to the sustainability-linked bond market. So basically, we ticked all the boxes to be as a credible issuer in this market. I don't know if you want to hear more about the sustainability-linked bond, how we structure it, or...
Yeah, I think it would be interesting to understand how you integrated actually ESG into your broader funding strategy. I think it's important that I think all of us look at this more than one-off transactions, and I think it would be helpful for the audience to understand how ESG became a core part of your broader funding approach.
Yeah, sure. No, ESG actually is a matter of everyone at Lafarge Holcim. Our top management is very much involved in the topic, and as I said, we have our CSO sitting at the ExCo, and also, of course, our CFO is bringing these topics in during our meeting with the management, and we have our full support. So we've been doing a lot of things to integrate ESG into our funding strategy. So first of all, we have amended all our bilateral facilities to integrate an ESG mechanism to link the margin of our bilateral to our Sustainalytics performance. So Sustainalytics is one of the leading ESG agency. So in a nutshell, if our Sustainalytics score improves, our margin we decrease by a few bips. And on the other hand, if our sustainability score deteriorates, our margin will increase by a few bips. We've also set up an ESG European commercial papers. I believe we are the second corporate to have done this also to have used this funding instrument. So the notes issued under this program are qualified as ESG notes as long as our rating with Sustainalytics remain within the top 25 in our industry, the top 25% in our industry. And last but not least, as you said, we have recently issued a sustainability-linked bond, positioning us as the first issuer in the construction material sector. And I believe we are the first corporate to have done it so far. So today you have around 6 billion, around 6 billion CHF equivalent of related funding agreements linked to ESG. Just I want to highlight that all this was made possible because we have, as I said, a credible, ambitious and a strong sustainability strategy, but we have also done a lot of work in terms of improving our ESG ratings by getting in touch also with the main ESG rating providers. So I really encourage all the corporates who are watching to us today to contact also the ESG rating agencies and to engage a dialogue with them as we do for the credit rating, and really to take control of the ESG ratings, because it will also help you, of course, to use them in our funding strategy. But let me revert now quickly on the sustainability linked bond we did to reply specifically to your question. So we issued 850 million sustainability linked bond euro with a coupon, a very attractive coupon. It's one of the lowest coupon that we had reached at that time, because we also issued in the beginning of the year and we had even more attractive conditions. So the bond had a maturity of 10.5 years. We used as a sustainability KPI our CO2 footprint, which is for which we committed by 2030 to reduce our scope 1 emissions by around 18% compared to 2018 baseline. So the bond is structured in a way that if we miss the target by 2030, we will have to pay a one-time step-up coupon of 75 bips to investors at maturity. So basically, this represents a cost of around 6.4 million euro. So it's an additional cost, but it's also for us very important because it demonstrates that to investors that we are really committed to achieve our target by all means, and if we fail, we will have to pay.
Thank you, Leila. This is really interesting. Before I bring in Will, can you just say one more word about the investor perception? What feedback did you get?
Yeah, and actually we had a very positive feedback, and we were very well welcomed by investors, and we saw it, during the pricing and the execution of the bond. We achieved 8 bips negative new issue premium. We've never had such a negative NIP in the past. And we had also very good diversification of our investor base. 55% of our bond was bought by ESG/sustainability pockets. We did also marketing process before the execution, and we had a very good perception from the investors, and they would like to see us to use more often these instruments when coming to the capital markets.
Thank you very much. That's really helpful. Will, commodities and the food system are right in focus of this topic in so many ways. Can you give us a bit of an overview, the progress that has been made, the pressure points, and then how you as a company are dealing with this?
Yeah, no, thanks very much, Daniel, and good morning to everybody, and good afternoon, I should say, as well. Look, maybe it would be useful if I just go through our journey and some of the observations over the last 5 years, and just very quickly so people understand the nature of our business. It's quite important. So we're a supply chain service company, looking after every aspect of the supply chain, from if you like, the agricultural side, all the way through to delivery to a lot of food and beverage companies across the world globally. So we could be acting on behalf of, for example, a beverage company in 60 different locations around the world. So a huge amount of detail and physical movement of goods. So about 5 years ago, we were asked and challenged, if you like, by a number of our large multinational clients how we could assist them with their sustainability journey and looking to improve their supply chains, their global supply chains. It was really interesting. We could have very simply just advised them to look at and work on a particular certification standard, or whatever it might be. But we realized that we were actually in a very privileged position within these supply chains, and by actually being involved commercially and with all of the relationships, we had a huge amount of opportunity to bring some value and manage that in a responsible way to actually really impact change, sustainable change. And so this was, at this point, we then teamed up with another company called Interlink, which is owned by one of our shareholders, which has been involved in sustainability in agro-processing for the last 20 years. What was fantastic, we were able to take all of their experience on continuous improvement programs in this area and bring it together with our expertise on supply chains. And as a result, we formed a partnership called VIVE, and this VIVE sustainability program on commodities, as you quite rightly pointed out, Daniel, starting off with sugar, but also moving into dairy, fruit, energy now, and also packaging. So almost every aspect for the food and beverages industry around the world. So maybe just rather than going through the details of the program, which of course I'm happy to do, but just conscious of time, just one of the key observations of how to make real impact. And what we've noticed along the way is unquestionably that, yes, the continuous improvement is a really, really key component of success. But also, if you want commercial impact, you really need to be, if you want impact, sustainable impact, you really need to be commercially led. So this has been a key aspect of the program and has achieved a huge amount of success. Linking that into the funding side is very important. Obviously, all supply chains around the world, the key gel, if you like, is the trade finance, and unquestionably, there is a huge amount of opportunity in this area of green finance, and this has just started to take shape with some incentives, some commercial incentives, almost as Leila was suggesting earlier on. So if that gives a little bit of an idea of the progress and the huge amount of work that's going on at the moment.
Yeah, thank you, Will. And can you say a bit more about the role of the treasurer in this, right? I mean, often this will be a topic that is sitting in the procurement department. People realize it's important, but how can the treasury team help make this as you say, a commercial imperative?
Sure. I mean, I think from the treasury standpoint, the link between ESG and the aspirations or your funding requirements and what you need to do, it's absolutely key. As you mentioned earlier on, we're currently witnessing at the moment that nature is a huge force, and so the global environment and improving it is key to all of us going forward. So being able to have the ability to help write the green economy of the future is critical to all of us. And so a lot of companies are coming under increasing pressure and scrutiny in this area. So the neat thing here is to align your financing needs and your funding requirements with your aspirations and your needed aspirations on the ESG side. If you don't, quite simply, you will not be achieving the most competitive rates of funding out there as we go forward. Unquestionably, we're seeing more and more access to the most competitive funds coming from effectively green finance. And so this is a really, really key bit. One of the key things I would suggest that is absolutely critical is actually making sure that the risk of greenwashing and everything else, making sure that the credibility of the structure you put in place is really robust, and that there is full traceability and transparency through any ESG benchmarks or KPIs that you put into any financial structure. So the quality of data is critical in all of this.
Can you say a little bit more about this? Because I guess a lot of people will always wonder with incomplete data, and obviously a very fast evolving set of standards and also legislation. How do you start in this field without having the perfect landscape of requirements ahead of you?
Yeah, no, look, it's a really good point, and if you look at absolutely different people are at different stages of their journey, if you like, their sustainable journey, and so there are different shades of green. You could argue, but from our side, very much we're of the firm opinion that taking a continuous improvement approach is really critical in this area. Okay, so trying to include everybody in their journey. So how to measure and to understand exactly where people are. So making sure that you're working with a good program, a continuous improvement program, ideally, the quality of the data, so proper sustainability assessments on a regular basis, annualized, and then obviously working on improvement programs and seeing how they can be benchmarked against certain standards. These are key criteria, and then some very neat reporting, for example, against the UN SDGs. These are key things in my mind going forward that people need to build in to any structure that they're trying to put in, so they can actually report and be committed with the information that they're providing.
Thank you, Will. Farnham, could I bring you into this discussion? You have been leading a lot of the innovation in the space, a lot of the new sectors. Tell us about your view on 2021. What's on the horizon? What are the, let's say, the hot topics in this field?
I think it aligns nicely to what we've been talking about so far. I mean, certainly the diversification in terms of instruments, moving away from just the kind of use of proceeds format for either bonds or loans or other financing, but also looking at potentially performance-based instruments like sustainability-linked bonds and loans. I think that's really key on the agenda. I mean, we have seen last year about 7 billion in issuance in sustainability-linked format. We have already exceeded that in the first 3 weeks of January. So it's clearly accelerated in terms of the interest from the corporate side, in addition to, of course, LafargeHolcim is the first construction materials company. We've also seen Chanel, Novartis, and earlier this year, a number of emerging market corporates as well, looking at the sustainability link space. I think that diversification is going to be a key theme throughout the year. And I think among corporates, what you're likely to see is use of both the traditional kind of use of proceeds format as well as the sustainability link. And the other, I think, key theme for the year is a continuation of what we saw in 2020 in terms of diversification of sectors that are looking at this market. Up until 2019, the majority of corporates that were issuing in the sustainable finance market were from either utilities or real estate. And last year, we saw a massive breakout in terms of chemicals, issuing with BASF and Arkema. We saw the likes of airlines such as Etihad, and I think that's also going to continue in terms of sectoral diversification coming on the forefront in 2021. Probably the sort of overarching theme behind all of this is, what both Will and Liz have indicated, which is that we, from our clients, see it is a much more integrated and embedded approach towards ESG when it comes to the funding strategy. This is no longer seen as a sort of one-off exercise, but rather even where we have issuers that are not necessarily labeling their issuances in green or sustainable format. Part of the credit story is now very much linked to ESG and how companies are performing on environmental and social criteria. And so I think that integration is also, what we expect to see more of over the course of 2021.
Thank you. And can you speak a little bit about investor requirements, right? This has clearly, as I said before, has taken a different turn again in 2020. what are people looking for when they look at especially the bond space, but also increasingly, I think, the private market?
I think it's important for corporates to note that investors are facing a lot of the same pressures that corporates themselves are facing, right? The same pressures from their clients. I think from a lot of our investor clients, what we hear is that over the course of 2020, there was a pretty significant rebalancing of funds towards sustainably labeled funds over conventional counterparts. And we expect that to continue over 2021. And investors are also under a significant amount of pressure from regulators. So the first round of sort of regulatory requirements when it comes to reporting on ESG, particularly among investors that are marketing into Europe, is actually going to be a requirement on the part of investors, not on the part of issuers, which is alignment to the new sustainable finance disclosure requirements, which calls on investors to disclose to what extent they're taking into account environmental and social factors in their decision-making process, and also more specifically how they are aligning to the forthcoming EU taxonomy. And so I think investors are really pushing to ensure that they also meet all of these demands from the parts of their clients and stakeholders and regulators. In terms of specifically what we hear from investors baseline requirements, there's a huge focus when it comes to the implementation of the requirements of the TCFD. And certainly I think here in the UK, we obviously have the signal from the government that will be a mandatory reporting requirement on the part of companies. But in terms of investor approach to climate risk, I think that's also a key ask. And, the TCFD is a significant exercise for any corporate. And so I think there is a fair amount of not flexibility, but understanding at the moment that's a journey that you won't come out of the gates with, parts of reporting right there, but that you need to demonstrate kind of how you plan to implement those recommendations.
And can I ask you, but maybe also Leila and Will, there's a lot of new words and acronyms like TCFD and ESG and a lot of legislation coming on disclosure. How do you learn all this in traditional organizations that looked at the funding strategy?
Yeah, just on my side quickly. No, I really work closely with the sustainability team, and basically I spent 30% of my time on 2020 with the sustainability team. Yeah.
It's probably from my side. It's similar. The commercial team and the sustainability team are very closely linked. So you on the commercial side, you want to understand more. So the commercial team are asking questions all the time, and being fed all the time.
Thank you. Farnham, any advice from the work that you do with clients?
I think the other audience that often corporates can learn from is their investors. And there's a pretty significant amount of engagement that we see even among corporates that are very early stage on their sustainability strategies, in terms of getting into dialogue with investors to understand what their requirements are, to understand what they see as the material ESG issues, and how that's actually being taken into account in the investment decision-making process. So, the head of responsible investment from Amundi once said to me, the only bad ESG disclosure is no ESG disclosure. The more a company is willing to engage with me, the more confident I feel that they are taking this seriously and they do understand the importance of it. So I think that's the other potential audience that corporates can learn from, is to reach out to their investor base.
Thank you. Before I bring in Jonathan, I just wanted to remind everyone you can ask questions. There should be a Q&A function at the bottom of your screen, so please do, and I'll try to bring them in. But let me bring in Jonathan. As I said at the beginning, I think for many treasurers now, the importance of ESG and sustainability in their funding strategy is now quite increasingly obvious. The investment side and what you do with your liquidity is something that is probably less on top of everyone's list. So give us a bit of the view. Where do you see that evolving, and the role actually the investing side can play here?
Sure. Yeah, I think that's right. I think intuitively, it's much more intuitive to think about how ESG and financing are linked together. I think it's less intuitive on the investment side. But there are there are solutions, there are options that are available to investors to invest their cash in a sustainable way to help meet the wider sustainability objectives of the company, of the business. So there are on-balance sheet solutions. Later mentioned Lafarge's ESG Euro commercial paper. There are green deposits that are linked to green loans. And then also on the asset management side, we've seen the development and growth of ESG-focused money market funds. So obviously they are in an early stage of development, as to be fair, many investment solutions are in this space if you compare them to non-ESG solutions, but it's certainly a growing part of the market. It's around 35 billion in ESG money market funds globally. The growth rate is excellent. So the assets under management in these products doubled in 2020, and is expected to grow at a very rapid rate over the coming years. But still, being realistic, it represents less than 1% of the assets under management in money market funds globally. But we certainly believe there's going to be significant growth in this area. And I guess you have to start somewhere, right? In any new idea, in any new solution, you have to start somewhere. I often use the analogy of recycling in the UK. It wasn't that many years ago when nobody recycled anything. Recycling now at home is an art form, right? So, you know, I think this space is going to grow. It's going to grow in importance as a way of treasurers helping meeting the sustainability goals. But there are some challenges. And there are some questions that are raised about, well, how does it make sense in this space? So one of those is the short-term nature of the investments. How can you encourage change when you're lending or funding an issue in the money markets, maybe for a month or 3 months? Well, in fact, if I think about what we do, often we're just rolling short maturities, right? So what might be a 1 month maturity or a 3 month maturity, if we roll that exposure on a regular basis or a consistent basis, you might have ended up funding somebody for 2 years, for example. So I think it's a fair question to ask, but I think there's a robust answer to that. Limited sector breadth is a question that's reasonable. If you think about issuance in the money markets, dominated by banks, dominated by sovereigns, dominated by agencies, with some corporates, but it's a relatively small part of the market. So again, the question is, well, how can you play a part when you have such little breadth in issuance? How does environmental play a part? How does social play a part? Well, I think it's basic, you know, that's the market, right? So what has to happen is you focus on those investors that are in the market and you encourage change in terms of how they manage ESG risks through the investments that you make. And then the final challenge, and this has been touched on by Layla, has been touched on by Will, is I guess the lack of definition in this space. Because it's in its infancy, there are different approaches that are being taken by different asset managers. The regulation, whilst it's coming, is still limited relative to other financial services regulation on the asset management side. There's less familiarity from an investor perspective around some of the research providers in this space, some of the scorers in this space. Every treasurer is very familiar with Moody's and Standard & Poor's and Fitch. They understand their rating symbology, they understand their methodologies for rating. But Layla mentioned Sustainalytics, a key provider in the ESG space. MSCI is another one. But there's less familiarity, I think, with some investors with the scoring, with the methodologies that these providers use. So again, it's going to be a process of familiarization, a process of building knowledge, and building familiarity with with these other new providers, new agencies in this space.
So what are the trade-offs that a treasurer really has to go through here between, say, an ESG-aligned money market fund, a traditional money market fund? How do you decide?
Sure. Well, I mean, I think an obvious question, and one that always springs to mind with investors, is, well, you know, what am I going to have to give up in return if I want to sustainably invest my cash? And it's quite interesting if you look at this space. I think certainly in the front end of the market, there is limited differentiation of risk. Generally, I would say that's a general statement in my view around money markets generally across issuers from a credit perspective. But I think it's also true when it pertains to differentiation of risk and therefore differentiation of pricing and return when it comes to thinking about ES&G risk. So there's a systemic factor in the market that actually means the yield differential between, say, an ESG money market fund and a non-ESG money market fund is actually pretty low based on the analysis that we've done. We're talking low single-digit basis points. It's quite likely, and one would expect, that as ES&G risks continue to grow as a factor and a consideration for investors, that differentiation will grow, and therefore you may see that delta between the running yield in the two types of funds grow over time. But at this stage, it's relatively low. So the trade-offs from a return perspective are low, but there are other considerations that I think it's really critical for treasurers to think about if they're looking at this space. The investment process still has to focus on the key risks, which is preservation of capital and provision of liquidity. No treasurer is interested in giving those up for an ESG solution. So that's important. You've got to have an investment process that clearly demonstrates that you are reducing ESG risk in the mandate. And Will mentioned the term greenwashing, and it's a common term in this space. And I think I would encourage treasurers who are looking at this space to really think about what is the investment process that's reducing ESG risk? How is the fund demonstrating that it's truly doing that? Because there are some questions out there in our minds as to whether that is actually being done. And I think engagement, I think it was Farnham mentioned the term engagement. This is critical in this space as well. There's no point us just investing in ESG issuers that better manage their risks so we can demonstrate a better score from an ESG perspective. If we're not engaging with issuers, we're not encouraging change, we're not encouraging issuers to better address ESG risks. So how is the asset manager achieving that?
Thank you. Really insightful. Farnham, one topic that very often comes up in this context is we now see a proliferation of different terms, right? We have sustainability-linked loans, bonds, green bonds, transition bonds, SDG bonds. How do I pick the right one? And maybe also a question then for Leila after this. How did you go about picking the format that you picked?
I think the first question, regardless of which structure and which label issuers choose, that they should be prepared to answer when marketing the eventual issuance is, how does this align to your broader corporate strategy? And so that should be your starting point for really deciding, which route you're going to go down in terms of either type of bond or the label of that bond. So for instance, for corporates from, hard to abate sectors that have a lot of work to do over the next, 10, 15 years in terms of transitioning the business model, we do think either a sustainability linked bond, which commits to certain holistic KPIs across the business, or a bond that is, aligned to the transition finance handbook and use of proceeds format is the most useful, because that's what's going to allow you to use the bond to tell the story of your transition towards a more lower carbon business model. You have built your broader corporate strategy and your kind of ESG investment thesis almost as a business around the idea of social inclusion and supporting the communities in which you operate, then it probably is a good idea to incorporate that also into the bond that you're looking at, the transaction that you're looking at, and therefore incorporate also, social use of proceeds or potentially reporting metrics. That's really the starting point, is sort of and this is why I think, as Leila mentioned, the kind of coordination with sustainability team come first, because understanding what the broader messaging is that you're putting out from an ESG perspective makes it much easier, I think, to narrow down the options in terms of structures and formats. Then I'll just end with a little bit of a defense. I do think that the acronyms and the labels are confusing, but they're not that many of them. And we do have a good amount of coherence around the green bond principles and the social bond principles. So I think it looks more overwhelming than it is when you actually dig into all of that.
Brilliant. Thank you. And Leila, maybe your perspective, and if you give us a quick one, and after that, I would ask every one of the panelists just for a 30-second piece of advice for everyone for 2021. Leila, why did you go down the route you went down?
Yeah, no, actually, as Fana mentioned, so we have now in the markets a lot of products, which was not the case maybe 1 or 2 years ago, where we had only a use of proceeds products such as the green bond or the social or sustainable bond. Actually, when we were trying and we were looking at this market like a couple of years ago, and for the use of proceed bond, it's more cumbersome and more complex for corporate, to use the sustainability market. So actually, why we did the sustainability linked bond, it's also because it's also fully aligned with the whole strategy of the company. While the green bond, as I said, is only focused on specific use of proceeds, and it doesn't give, much options to a company to make use of the green market. Let's say it like this. Yeah. And with sustainability linked bonds, I believe that issuers will have the opportunity to address wider scope of their business instead of just focusing on specific activities. In the case of proceed bonds.
Thank you. Jonathan, your 30-second piece of advice for a treasurer?
Sure. Look at how investing sustainably can help your company's wider sustainability goals. There are solutions out there, and I'd encourage people to look at them, begin to understand them, understand the pitfalls, understand the benefits.
Will?
Absolutely. So totally agree. Informed advice is going to be key. So make sure that you're working with people who really are going to understand your commercial levers and how they can link the sustainable targets into those.
Fana?
I'm going to piggyback off of something that Leila said in the context of ESG ratings, which is to really own your narrative and your strategy when it comes to ESG. There are a lot of external stakeholders, be they rating agencies or journalists, that are writing that narrative for you. So if you don't get involved, that narrative will get away from you. So we really encourage you in terms of disclosure, engagement with investors, and potentially also sustainable finance issuance to take control of that narrative.
And Leila, final piece of advice.
Yeah, thank you. Not just on my side, I will encourage corporates to make more use of this market and to integrate more ESG into their funding strategy. It could be challenging, but I believe it's mission possible. So, yeah.
Brilliant. That's encouraging. And I would like to thank all of the panelists, and thanks everyone in the audience for spending some time with us, and have a very good afternoon.
Thank you very much.
Thank you very much.
Yeah, bye-bye. Have a good day.
Bye-bye.